What would you do if the decisions made today determine the safety of your retirement, your savings, or even your job tomorrow? Because as Donald Trump takes the helm again, the stock market is already reacting. Some say positively, others with panic. So, is your portfolio ready for what's next? Let's find out. And hey, if you're thinking, I don't even have a portfolio, trust me, what we'll cover today could still impact your paycheck, your rent, or even that dream vacation you're planning. Immediate market trends. Let's start with the immediate reaction. Stocks surged following Trump's election announcement, but not without volatility. Why? The markets love tax cuts, deregulation, and infrastructure spending, policies Trump champions. But here's the catch. These same moves could fuel inflation and lead to higher interest rates, a nightmare for growth sectors like tech. So, are we heading toward another bull market, or are the cracks already forming? We'll get there. First, let's talk about something that hits closer to home for most of us. Real estate. Sector-specific impacts. Under Trump, energy companies could shine with deregulation, and manufacturing might see a revival thanks to pro-America policies. But tech and renewable energy, they could face an uphill battle, especially if tariffs or protectionist policies resurface. Basically, it's like playing Monopoly with a board that changes every turn. You don't know if you're buying boardwalk or a parking ticket. But what about the average investor? Should you double down on energy stocks or avoid them like the plague? Before we answer that, let's look at how international markets could shake things up. Global market reactions. Here's where things get tricky. Global markets react not just to policies, but to tone. Trump's stance on tariffs and trade agreements has created ripple effects before, and it could happen again. For example, tariffs might help US manufacturers, but hurt industries reliant on global supply chains, like electronics or auto manufacturing. So what's the smart move here? Stick around, because in just a moment, we'll break down actionable steps to safeguard your investments. Actionable insights. Now let's get practical. The first step? Diversify. If Trump's policies boost energy and manufacturing, consider rebalancing your portfolio to include these sectors. But don't overcommit. Volatility is likely, and staying flexible will be key. And if you've been putting off learning about index funds or ETFs, now's the time. These provide a safety net against sudden swings in individual stocks. Because let's be real, your cousin who invested in meme stocks isn't exactly a role model for financial security. Finally, there's one more strategy that could make all the difference: timing your moves strategically. Let's wrap it all together. The stock market's reaction to Trump's presidency offers both opportunities and risks. By staying informed, diversifying your portfolio, and keeping an eye on key sectors, you'll be better prepared to ride out the waves, and maybe even come out ahead. Because in times of uncertainty, it's not about predicting the future, it's about preparing for it. And speaking of preparation, don't stop here. Watch my next video. Trump's trade policies, what they mean for your wallet. Click the link on your screen to dive deeper into how Trump's decisions could reshape your financial future. Your wallet will thank you.